TV18.
Hello and welcome to our special coverage of the GST Centimeter. I'm Ritu Singh. And the Finance Minister Nirmala Sitharaman addressed the media after the 52nd GST Council meeting. So let's take you through some of the key takeaways from that announcement that's just come in. First, on extra neutral alcohol or ENA, the GST Council has ceded the right to tax ENA to the states, which means if the states want to tax it, they are free to do so. Secondly, GST rates on molasses has been slashed to 5% from 28% earlier. The Council has also decided to not levy any GST on millet flour, which contains at least 70% millet composition. However, a tax of 5% GST will be levied on branded millet products. In some other decisions, the Council has approved to increase the tenure of the President of Appellate Tribunal up to 70 years from the earlier 67 years of age. Now, for more takeaways, let's bring in my colleague Timsy Jeparia, who's standing by with some of the key highlights. Timsy, take it away.
When it comes to the proposals that are very crucial for our audience and for people is firstly the reduction in the changes in rates, as you mentioned, on millets. Well, 0% if they are sold in other than pre-packaged and labelled form, and 5% if sold in pre-packaged and labelled form. So that is for where usage of millet flour is more than 70% or at least 70%. When it comes to ENA, well, that's a big clarity coming in from the GST Council that GST rate on molasses has been reduced from 28% to 5%, and ENA, when used for industrial use, will attract a GST of 18%, but when ENA is used for human consumption, it has been left to the states. States will decide on their taxes and VAT. Apart from that, when it comes to GST Appellate Tribunal, well, that age limit has been changed for President. They've gotten the age limit of 70 now. Earlier, it was 65 and 67. And also for members now, lawyers with at least 10 years of experience in indirect taxes can also be part of the Appellate Tribunal. That has come as a clarity. Also, provision for automatic restoration of provisionally attached property after completion of 1 year has been gotten. There are clarity with related to place of supply, especially when it comes to co-location services. It's clearly that clarity was something that the industry was looking for, that when it comes to providing a contract where the client is based outside the country, over there 18% GST will not be levied. It will be termed as exports. But yes, once the contract is only for giving the real estate, only maintaining the server and not giving any other services, well, that will be taxed as a service and under 18%. That is something crucial. Also, when it comes to other clear points, and importantly what the council was looking at was how to see various issues of supply, various issues. So there's a clarity coming in for advertising services also is what I'm given to understand, that circular will be issued. Also supply of services of transportation of goods, including by mail or courier, in case where location of supplier or location of recipient of services is outside India. That clarity is also what the council has decided on.
All right, Timsy, thanks very much for joining us with those highlights. To take this discussion forward, we're now joined by MS Money, partner GST at Deloitte India, Pratik Jain, who's partner at PwC as well. And we also have Mr. DP Nagendra Kumar, who is the former member of CBIC. Gentlemen, thanks very much for your time here. Mr. Money, let me start with you, actually, before I toss it to my colleague Timsy to take this forward. Earlier in the week when we spoke to you, you said some clarification was needed when it comes to the GST on corporate guarantees. It should not be retrospective in nature and so on and so forth. You've now heard from the Finance Minister. What is your key takeaway?
Okay, so I think the issue on corporate guarantees has been hanging fire for a very long time. And this is something, as I mentioned earlier, is something which has been picked up in most of the audits that we have seen. And therefore, a clarification which says that when the director of a company issues a guarantee, he is issuing that in his capacity as a director. And there is no fee that he or she is charging for that. And obviously, that needs to be taxed at a value of 0. So it's very good to see that happening. It's also good to see a presumptive value of 1% being attached. The worry that I have is even though it is 1% of the guarantee value, which will now form the taxable value for GST purposes, In recent times, because India Inc. has been on an acquisition spree, we have seen guarantees of very large amounts which are being issued. So when you have a very large amount of corporate guarantee that gets issued, even a 1% of that turns out to be a very large amount on which an 18% is applied. I also think that sometime in future, we will need to see some provisions where the GST paid on corporate guarantees, if it is not available as an ITC, or if only partial ITC is allowed on that, because the recipient is an NBFC or anyone else, in those cases, we need to have some kind of a provision which says that those are the cases where there will not be a notional value attached to a corporate guarantee. But overall, the issue on corporate guarantees being resolved and having some kind of clarity will certainly benefit the taxpayer and business. It will also benefit the GST audit authorities who have not been very clear in terms of how to go about taxing corporate guarantees.
Coming to you, Pratik Jain now, what do you make out of this entire proposal on corporate guarantee and personal guarantee? How do you see this move? I'm told that there were certain pending cases also on this regard, and this clarity could actually ease those notices which have been sent to companies.
Yes, I mean, as Mani pointed out on the personal guarantee, I think clarification is, of course, welcome to say that director is not charging anything, there's no GST. And if they're charging anything for the guarantee, then GST shall apply. I'm a bit concerned on corporate guarantee. I mean, I'm not sure how this 1% value has been arrived at, because in some cases, actually, the large infrastructure companies would pay a much lesser percentage, arguably, to banks for a similar guarantee. Let's say I could pay 0.25 or 0.5. And in the past, a few companies might have actually done an independent assessment and paid on a lower value. So if it is clarified that 1% will be prospective and it will not be taken as a benchmark for the past period, it's still okay. But if 1% is then used by the authorities for the past periods as well, then it will lead to more litigation, I'm afraid, right? But prospectively, at least it gives a benchmark to the industry and to pay at 1%. As I pointed out earlier, in most cases, this GST will become a cost for the industry because these kind of guarantees are issued in large projects, infrastructure, power, and so on, where the ability for the recipient to take input credit is usually not there because power, let's say, is exempt from GST. And therefore, if the council clarifies that 1% is prospective for the past period, will not apply 1% as a threshold, then it's good. Otherwise, it will lead to more disputes for the past period.
Coming to you, Mr. Nagendra Kumar, as both Pratik and Mani mentioned that there are certain clarities that are required. I wanted to know first why this proposal has actually come up in the council, because what I am given to understand that already there was certain clarity on this which was existing in the circulars earlier, in the law earlier, and now law committee taking this proposal forward again. What was the need to come up with this proposal on corporate guarantee and personal guarantee? And as Pratik and Mani are questioning, why 1% where in cases there could be a much lesser amount that can be paid?
Yeah. Thank you, Tim.
Since you're former GST member at CBIC, yeah, why this proposal has come up now?
Yeah, Timsi, thank you. In fact, insofar as the taxability of the transaction is concerned, I think we need to keep it in mind one aspect in GST that any activity provided which has got an economic value could be treated as a transaction that could be deemed to be a supply. But more importantly, since a transaction happening between the related parties could be a deemed supply in terms of the Schedule 1, I think a view has been taken that this is a service, and if it is provided among the related parties, whether it is a holding company, subsidiary company, or associate company, it could be a supply without it. Consideration could also be a supply. Therefore, I think so far as the taxability is concerned, I think the view taken, according to me, I think it falls within the ambit of the GST law, which defines supply to mean a transaction. It is used in the course of furtherance of business. And of course, in so far as those transactions which do not have a consideration, but if they are deemed to have a taxable supply in terms of Schedule 1, it will get attracted. Coming to the second aspect with regard to valuation, I do agree with Mr. Mani and Pratik as to what they have said about what is the rationale for arriving at 1% on a prescriptive basis rather than look at the actual basis. But the challenge would be, I think, in so far as the transactions in real world are concerned, a bank may or may not charge interest in certain cases of a guarantee provided. Depending on the KYC and also the credibility of the customer, probably sometimes it could be waived. It could be anywhere ranging between 0.5% to 3%. So I think in order to make the entire process easy to administer, I think the thinking is that introduce a value which could be deemed as a value for the purpose of levying GST. And let us also not forget this thing that in terms of Section 15, the government has got the power to prescribe a value in certain situations, what we have looked at in terms of the tariff value and other provisions. So the power to fix a certain amount as a deemed value legally valid, and the rationale as to why 1% of the bank guarantee, 1% of the guaranteed amount, the fact of the matter is that it has been ranging from 0.5% to 3%. And in some cases it could be waived, therefore it has been taken. And I do agree that Pratik's view is very correct that it has to be prospective in order to bring certainty and clarity and avoid litigation.
Let me come to Mani, and this time it is on ENA. As we heard that ENA is also something that a lot of clarity is coming in to reduce litigation. That was the entire idea to discuss this proposal today in the council. Mani, reduction on taxes on molasses to 5% from 28%. How is it going to impact the industry? And yes, what sort of a clarity does it bring in for the liquor industry?
The first point over here is that the fact that the centre has ceded the right to tax ENA in the context of the alcohol-related businesses, which are in any case outside the purview of GST, to the states, despite the Allahabad High Court decision, to me speaks very highly of the principle of cooperative federalism that we have been seeing in GST for quite some time. There have been a lot of discussions, even in the past GST Council meetings, on various contentious issues. But over a period of time, we have really seen GST Council as becoming a very good forum for states and centre to sit and discuss their fiscal issues in the context of an indirect taxation. Now, this decision again reaffirms that cooperative federalism principle, where the centre has handed over the right to the states, which is the right thing to do, because in any case, taxation of alcoholic beverages is outside the purview of GST itself. Unlike petroleum, it's not an issue which is within the GST coverage, where a decision has not been taken to extend it. This is completely outside the scope of the GST coverage. And it is a state's prerogative to tax alcoholic beverages. So in that light, if the decision to tax ENA is left entirely to states, it's excellent decision. I would just pause for a minute over there and say that it would have been good if some principles had been given to the states on how to tax ENA. Because what this will lead to is each state having varying rates, vastly different as we have seen in the past, and that will lead to its own issues in respect for the ENA manufacturers. Because the ENA manufacturers will be levying ENA at a particular rate in a particular state. Now, the same manufacturer in a different state will have to levy the tax at a different rate. And therefore, for the alcoholic beverage manufacturers, they again are subject to a situation where one of their key raw materials attracts various rates of VAT in various states. So if there were some guidelines which the centre and states could have agreed in terms of saying, look, these are the benchmark rates, have the rates from this till this based on these principles, that would have been very, very, good. As far as molasses is concerned and ENA for industrial use is concerned, I think this is something which was awaited for a very long time. And I'm glad that they have taken a decision on that today.